it's likely to be a return to growth for the Indian economy in the October-December quarter after seeing two consecutive quarters of contraction on account of the COVID pandemic. In fact, ET poll suggests that in Q3, Indian economy is likely to grow somewhere around 0.6%. This is the average estimates. However, some of the economists do see a much better growth for Q3. For instance, Morgan Stanley sees Q3 GDP at 2.6%. Citigroup economists see Q3 GDP at 2.1%. Barclays sees Q3 GDP at nearly around 0.8%. Indian economy did contract close to around 24% in Q1, as well as contraction of 7.5% was seen in Q2 on account of the COVID pandemic. For FY21, 18 poll sees the estimate at somewhere around a contraction of 7%. This is versus the first advance estimate, which did peg GDP contraction at 7.7% for entire FY21. Speaking about Q3 growth, well, Q3 growth is likely to be led or supported by agriculture sector as well as the industry sector. ID as well as the allied services are likely to grow at 3.5% according to ICRA estimates. Abundant monsoon and record sowing are likely to help the overall agriculture sector, and some of the economists see growth as high as 4%. Industry growth is also likely to be positive at upwards of 2% according to ICRA estimates. Corporate earnings are likely have already been fairly strong in Q3. We have already seen fairly important or positive movement in a lot of high frequency indicators, and all these factors are likely to support the overall industry growth as well. In terms of the services sector, well, government spending is likely to support the overall services sector, although some of the economists do see services sector contracting by nearly around 1.1%. This is according to ICRA estimates. In fact, trade and commerce section has seen is likely to see a sharp contraction, as these are the contact intensive sectors and they have faced fairly anemic demand conditions. Financial services contraction is likely to be slightly lower this time. We're already seeing some amount of uptick coming back in the credit growth itself. Overall, government spending is likely to support the entire services sector itself. So overall, fairly the good news is that yes, Indian economy would be returning back to growth. In fact, Soumya Kanti Ghosh of State Bank of India did mention that out of the 41 high frequency lead indicators, 51% are showing acceleration. The corporate results so far also reinstate the fact that Q3 would be much better than Q2, with a growth of 14.7% in the corporate GVA of over 1,000 companies in Q3 compared to 8.6% in the previous quarter. However, Mr. Ghosh also points out that we need to be fairly cautious in terms of the projections, as a lot would depend in terms of the pace of COVID infections. In fact, ICRA economist Aditi Nair also mentions that encouragingly all the non-agricultural lead indicators recorded a continued, however uneven improvement in volumes in Q3. The pickup benefited from the continued unlocking of the economy, uptick in consumption during the festive season, as well as higher government spending. So yes, all in all, Q3 is likely to be better. And if you look at RBI's projections itself for FY22, RBI sees FY22 growth at 10.5%, and H1 of FY22 itself is likely to grow anywhere between 26.2 to 8.3% according to RBI projections. So yes, let's wait and watch out for the GDP numbers on Friday evening itself.